Good morning. Welcome back to another edition of the PreMarket PulseScan report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we place right in your hands each and every trading day. We bring the heat, we bring the pain. You know what it is and how we do it. It's time to take a look at the markets. There's a lot going on in the world, and we have quite a few things to discuss. If I recall, there's something I need to make a note of here. The last 24 hours have been interesting, been having some technical issues. Couldn't do the charts and stuff I wanted to do last night, but hey, I made it work. All right, there is a webinar that we got going on. And let's see, this will be this Friday. And it's going to be a special report. And it's for partner and free members. All right, but you got to be a member, whether you're a partner or you're a free member. And more details will be forthcoming as we get closer to Friday. So definitely go to PulseWaveTrading.com. If you would like to be a part of that, you need to either have a free membership with this or a special partner membership with this, then you can attend that, okay? So again, that's PulseWaveTrading.com, where you can go and find out more about that. More information will be revealed, like I said, as we get closer to Friday. Let's see what else we got going on here. I'm going to try to do a special trading webinar today too after the broadcast. At some point today, I want to do a live trading with the members, especially our new members. Markets have been very aggressive here lately, and I want to break a few things down for you. Kind of pick up where we left off on our last webinar, trading webinar that we did. And I want to just point some things out. Just when I thought that I was going to emerge out of the lab, and there I go right back in it again. But again, you guys know that we're constantly looking for ways to, bring you better and more timely information. And that's just what I strive to do. And it takes a lot of work to keep it up and going and running at full capacity, because we don't take any shorts and we make it do what it do each and every day. We bring that noise. So without further delay, let's take a look at what's happening. We're getting closer to the opening bell. So we did have some reports that came out this morning, and I think they were yuck, but the market totally ignored it. Didn't care at all. Look at your Dow futures up 138 points at 28,760. NASDAQ 100 is up 127 and a quarter points at 12,438 and three quarters. E-mini S&P 500 showing strength up 20 and a half points at 3547 and a half. Russell, my hustle, is only up 4.5 points, trading at 1582.80. The mighty Bitcoin Futures Composite Index down a whopping $565, trading at $11,510, when in the overnight high we hit $12,175. Again, this is why you need the PulseWave price trigger reports. And this is another reason why, too, you're going to definitely need to come out and check out the live trading webinar, because this was being explained all week. We talked about what was going down and what you could expect. This is another reason why we put out loaded reports as well as the regular normal reports, because it helps you to draw a consensus as to what's going on, and it helps you to know when and where to capitalize and get out of the market. Now, suffice it to say, we did get a crash alert several days ago, and we did get some downside production, nice downside production. Then the market managed to bounce back up again. So in the last 3 trading sessions, the market has steadily climbed. All right. So what you needed to do if you were still long the Bitcoin, as I always say in every end of every video, you need to tighten up stops. You need to pop your way through it, manage your open positions so you don't turn, winning trades into losing trades. I preach that to you all the time. And this is why, because without warning, markets can turn. All right. They can do that. That's why we issue the intraday price inflection points for you to follow as well, so that you will know in advance what to look for. All right. So this had all the warning signs you needed so that you could take some profit. If you failed to do that, I don't know what to tell you, because it's going to depend on how the market closes today. That will determine what's going to really happen here. We're going to get more of the same, or just a an attempt to shake out all the week longs. Tough to say. That's why you have to wait at times and see how the market's going to shake out, because at the end of the day, that's really what it's about. The market just has to blow off some steam, shake some people out of it, and then decide what direction it wants to go. And because you are in a bull market on the daily charts on the Bitcoin, the biggest concern is, okay, when is this ride going to be over? Well, I've done multiple videos explaining that we're at a crossroads. Either this market's going to try to go to 12.5, or it's going to go to 10.5. And it looks like the market made its mind up. It wanted to try to go to 12.5. That is what the tea leaves were showing us. All right. The market did break 12,000. All right. It hit 12,000 quite a few times before dropping back. Seems like every time it hits 12,000, we get that correction, right? But you can't really count the market out just yet. All right. You have to wait and see how things are going to shake out. And this morning, we have seen quite the shaking. So the question will be, how much further will it pull back? Is this just a test of the emergency broadcast system or not? And that's kind of where we are right now. We don't know what we don't know, is what it's boiling down to. We just don't. We don't know what we don't know. So when you get situations like that, you just have to sit back, take a step back and say, okay, market, tell us what it is you want us to know. What do you want to do? What are you trying to do? And then you just align yourself with it. It's just that simple. You align yourself with the market. All right. So if you continue to see here, we got nat gas now off a nickel. It's continuing its pullback. So that crash alert is really paying dividends on the nat gas. Crude oil right now is up a nickel at $42.80. We got the long bond trading at 176 even, and it's off 11.30 seconds. We got gold now down $15 at $1,963.20. We got silver down 78 cents at $27.86 after hitting $28.54 in the overnight market. The real story, though, is the dollar gaining strength after threatening to hit that 91 handle. Overnight low was 92.20, and now we're sitting at 92.75, near the highs of the session. Euro dollar is down 71 pips at 118.42. Pound sterling off 53 pips at 133.32. The Aussie is down 45 pips at 73.23. Canadian dollar up 7 pips at 130.73. Euro yen is off 49 pips at 125.73. And the dollar yen up 28 pips at 106.25. Kiwi off a pip at 67.56. Very interesting moves in these markets. It's almost like the euro yen does not like the 126 handle. Every time it gets to it, it shows weakness. It struggles. Is this the precursor to a top in the U.S. equity market? Looking at soybeans, we're off 5 points at 949 and 3/4. Corn is off 3 1/4 at 354 and 3/4, and wheat down 5 1/4 at 558 and 3/4. All right, so that is our overnight market recap. Now it's time to take a look and see what's on and cracking in the rest of the world. Overnight news looks a little bit like this. The dating app Bumble is preparing for an IPO worth between $6 billion and $8 billion. Bumble, the location-based dating and networking app that allows women to make the first move, is prepared to go public as soon as early as 2021, according to a Bloomberg report. So that's where we're headed now. Dating apps, huh? Whatever happened to the old-fashioned gentleman approaching a young lady and asking her out to dinner? Whatever happened to that? Oh, I know, COVID. You can't get within 6 feet of a person. Hong Kong's richest man holds an $11 billion stake in Zoom that makes up 1/3 of his total wealth. Hong Kong's richest man, Li Ka-shing, currently holds an $11 billion stake in video conferencing app Zoom, video communications that make up 1/3 of his wealth, according to Bloomberg. Why would you put 1/3 of your wealth in one company? Talking about putting all your eggs in one basket. That's 11 billion eggs. Investors are bracing for a choppy market, no kidding. But volatility typically falls before elections, one strategist says. The upcoming U.S. election has been cited as a key factor causing volatility for markets this month, but one strategist says that September will be calmer than many investors expect. Yeah, because September tends to be kind of calm, but when we get these crash scenarios, September is the month that sets it up. Market topping scenarios, August is the month that sets the topping up. We're now at September the 2nd after hitting a new high. Chances are our topping month will be September. And then October will be a Rocktober. So that is a strong possibility going forward, you guys. Warren Buffett's Berkshire Hathaway recently disclosed that it owns 5% of each of Japan's 5 biggest trading companies, or Sogo Sosha, the Itochu, Marubeni, and Mitsubishi, and Mitsu, and Sumitomo. The positions which Berkshire built over the past 12 months were worth a combined $6.9 billion as of Wednesday's close. Very interesting. Very, very interesting. Apple, Amazon, and Google hike their developer and ad client fees to pass on the cost of paying new digital taxes in Europe. Amazon, Apple, and Google will pass on the cost of new European taxes on their revenues to smaller developers and clients. Stocks are mostly up. European stocks are sharply up between 1.8 and 2.3%. Asia stocks closed slightly down, and the US of A were ranging between an increase of 0.6 and 1% respectively. Earnings coming in: CrowdStrike Q2 2021 and Copart Q4 2020 earnings are due. On the economic front, we have the EIA crude oil stocks change, the Fed's beige book, and speeches from FOMC members. Mester and Kashari are due. All right, so that's your overnight market news. As far as the ADP employment numbers, well, they show that job gains are minimal. The ADP employment dramatically misses expectations in the month of August. Now, ahead of this Friday's payroll print, the ADP was expected to report a sizable $1 million person improvement in employment in August, a resurgence from the disappointing positive 167,000 print in July, but it significantly missed those expectations with a rise of only 428,000. Now, despite soaring ISM manufacturing employment data, manufacturing jobs barely even budged. The biggest job gains went to minimum wage sectors, believe it or not. The August job postings demonstrate a slow, lethargic recovery. said the vice president and co-head of the ADP Research Institute. Job gains are minimum, and businesses across all sizes and sectors have yet to come closer to their pre-COVID-19 employment levels. And only big firms like government-enabled through direct bailouts or Fed-enabled repression to offer low-cost capital market funding, well, they're hiring, with small businesses struggling since the PPP seemed to fail to spark with the resistance of what it was meant to do. So it can't do it. It's struggling. Now, finally, we know that the ADP has massively underperformed relative to the official payroll data in the last 2 months after strongly outperforming in 3 prior months. Today's 428,000 print gain is about a third of what economists expected from the BLS on Friday. But we're not sure this additional jobs data point offers anything but noise ahead of Friday's print, but that won't stop the algos from freaking out, of course. The markets are in run mode. And you know what happens when the markets hit run mode, right? You know, come on, spit it out, spit it out, spit it out. It is the crypto markets crashing after Bitcoin hit the 12,000 mark again. After a strong day yesterday with Ethereum up over 12%, the crypto market has crashed yet again, and the decline began around 6 a.m. Eastern Standard New York time, but really accelerated around 7 a.m. with a Bitcoin Cash and Ethereum being the hardest hit. Well, that's because Ethereum has been moving the strongest. Litecoin has been invisible as of late. And pretty much we've erased all of yesterday's gains with that move. No immediate news catalyst was evident for the move, but it is to be noted that it happened soon after Bitcoin topped the 12,000 mark again. It seems someone really doesn't want to see Bitcoin above 12,000, or maybe something else is going on. Okay. Well, if you look at Cointelegraph's Joseph Young's notes, the 3 factors are leading traders to become more bullish on Bitcoin in the short term to medium term are 1, the declining US dollar. That's a no-brainer. 2, the strength of the 10,000 support. Really, it's more like 10.5. And then 3rd, the Ether's strong upsurge. Well, I guess you could say it was a confluence of factors that support the uptrend of Bitcoin. According to cryptocurrency trader Scott Melker, the US dollar is showing slowing momentum, and this is shown by the dollar breaking down from a 10-year long channel and demonstrating a clear rejection. He states that the dollar looks dead. As he's been saying for months, there was a weird euphoria last week that it was bouncing. Now, the breakdown from a decade-long channel is clear. It should bounce up to retest at some point, but there's nothing bullish, and that's good news for Bitcoin. Well, like I've been saying, according to the Trump White House strong dollar policy, all they really need is for the U.S. dollar to keep printing above 90. All right. His policy fails if the dollar gets below 90. As long as it's positive 90, it's really not a big deal. It's going to fluctuate and go up and down. It doesn't matter. We don't care about the day-to-day fluctuations. The only thing that's really important is what the White House's targets are. And as long as there's a strong dollar policy at work, you will never see the dollar drop below 90. Yeah, it can scare everybody to death and hit 91, but notice how it went there and then rallied right back up again. All right, so that should tell you something about what's really good here with the greenback. All right, so yeah, markets do get volatile. The robots are fighting each other. But we don't care. All we care about is rally and crash alerts. And sometimes markets move without giving any hint at whatsoever. You can't pick it up. No matter how good your system is, and the PulseWaves are the best I've ever seen, you still cannot call every tick in the market. All right. Markets do what they do. But that's why not only are our rally and crash alerts spot on, but our intraday price inflection points are even stronger, because even without breaking news, even without crash alerts or rally alerts, The intraday price inflection points tell you exactly where the equilibriums are and what to do about it when you see those equilibriums break down. So PulseWave traders were alerted to whatever happened this morning long before it happened. Had a game plan yesterday, 24 hours ago, as to what to look for. That's why you need to be down with the program, peoples. PulseWaveTrading.com. All right, so with all of this market volatility, once again, Robinhood's in the news. Yeah. Robinhood traders are angry, and they have unleashed a tsunami of complaints. You don't say. You knew this was coming. Excuse me. Robinhood's quick rise to the top of the brokerage world hasn't come without speed bumps. To wit, the U.S. Consumer Protection agencies are being flooded with complaints about the app. In fact, 4 times as many complaints are being filed about Robinhood than other traditional brokerages like Schwab and Fidelity, according to Bloomberg. In 2020 alone, more than 400 complaints have been lodged against the free day trading app. The complaints have featured novice investors who are in over their heads, struggling to understand why they've lost money on stock options or had shares liquidated to pay off margin loans. Complaints were also filed when Robinhood's app went down for a full day back in March during the beginning of the coronavirus pandemic. Users complained about losing money and not being able to sell holdings. In retrospect, they should be praising the company for preventing them from dumping just before the Fed nationalized the market and sent the S&P 61% higher from the March lows. However, they still complained about not being able to make money because the app was down. A legitimate grievance, no phone number or direct contact at Robinhood have been listed, probably because the company still can't afford a client-facing support team. That was my first argument against the app, is that there was no trade desk. Why would you open an account with a brokerage firm that doesn't even have a trade desk? You can't even call anybody about accounting issues or situations and services. Do you know that the back office is the most important and most powerful part of any brokerage? If you don't have a back office, you really don't have a brokerage. You got to have a full-time back office complete with customer service, and you must have a trade desk. How do you not have a trade desk? How? That doesn't make any sense. You can't pick up the phone and call nobody? What if for whatever reason you're not near your computer and the app on the phone may be down or your phone battery could have died, whatever, you fill in a blank. What if you got to pick that phone up and say, buy me 10 Christmas cottons at the market stat, sell me 10 Christmas cottons at the market stat? What happens if you need to say that to somebody over the phone? With no trade desk, they don't know what you're talking about. You can't reach your back office. There is no one there. No one is home. There is no one with a Series 7 license or a Series 65 license or a Series 3 license or any of the above. There is no principal agent on call during regular trading hours, nothing. You have a lot of issues that come up in the accounting office, in your back office, in your customer service office. It could be something as little as, hey, I changed my name. I need to update my paperwork. Or I want to add someone to my account. Or I want to wire in some more money. How do you see what I'm saying? There's a zillion issues. Plus, how does Robinhood get to skirt past all the regulatory requirements that most brokerages have to have? You have to have a back office, and you have to have licensed personnel on the premises at all times, and you must be open to random audits and unannounced visitations by regulatory agencies. How are they getting around this? How? I don't get, how is that being allowed? No other brokers can do that. No other broker. If right now, if I decide, you know what, I think today I want to become a CTA. Well, not only do I have to contact the NFA, but I also have to go and I have to do all this stuff. Got to take a little exam, pay some license fees to set this up and set that up. Costs about $100,000 to set up, get the attorney paperwork straight and all that stuff. And then, like I said, you have to be open to unannounced visitations by the CFTC, NFA, whoever they want, SEC, don't matter. When they come by, when they stop by, your office better be open. And there better be somebody in there that's either a principal of the firm or has some type of securities license. Because you can't even talk to people on the phone if you don't have a securities license. All right, you got to have a license. You can't talk about securities without license if you are operating as a brokerage. I'm sorry. Those are the rules. I won't be able to do it. Why do you think that most channels like mine, that try to be like mine anyway, they don't give you specific information about markets? Like, let's say someone asks you, what do you think about Tesla? You can do technical analysis and talk about it, but I cannot give you specific buy and sells. Buy it here, put a stop. I can't do that. Can't do it. Cannot do that. But if you are a member, a paying subscriber to our service, then I can. All right. And you have to have full disclosures and all of that good stuff. I don't see how Robinhood's getting around all of those regulatory issues. The banking laws are no joke, man. I mean, there's all types of requirements. Seriously. And they're talking about adding all these different things you can trade. Really? What about the blue sky laws? If I wanted to open up a brokerage right now to this day, I would have to deal with all types of blue sky laws in my state, and you would have to deal with all the states you want to operate. It's just too much. That's just too much. You can't do it. But they're able to get away with this stuff and then not have a back office or a trade desk. Really? See what I'm saying? So it's like, man, whatever. Now, one complaint unearthed by Bloomberg in an FOIA request stated that it just says to submit an email. Now, this company's negligence cost me $6,000, they said. Another complaint from a user who estimated they lost $20,000 said, I can't make trades, can't take my own money, and can't leave their service. So you're locking people up into your service because they can't get out because there's no phone. There's nothing you can do. Now, the complaints are par for the course for a company that has focused solely on growth over the last few years. Now, Robinhood has signed up more than 3 million clients in the first 4 months of 2020 alone, and has become the go-to app for those in quarantine, receiving unemployment and looking for something to do all day. Regulators have received so many complaints that they have joked that they feel like they have become Robinhood's customer service department. And you know what? They pretty much have. Now, both the SEC and FINRA are currently investigating how the company handled its app outage in March. Their findings and any enforcement action is being watched closely as it may interfere with plans for an IPO that is widely expected from Robinhood, which is now valued at $11.2 billion after its latest round of funding. Now, if you take a look at what the FTC has received, you'll see that they have received far more gripes about Robinhood than their rivals in 2020. All right. Robinhood beat E-Trade, Schwab, Fidelity, and Interactive Brokers combined, according to the FTC. They got more. Robinhood has received more complaints than E-Trade, Schwab, Fidelity, and Interactive Brokers combined. That's horrendous, horrific. Robinhood has responded by saying it has doubled its customer service representatives this year and is hiring hundreds more. They also said that after March's outage, they have strengthened their platform and improved reliability. The company is able to offer free commissions because it sells its order flow. The company is able to offer free commissions because it sells its order flow. Something that has been harped on and pointed out numerous times and has been exposed that the app was selling its order flow to high frequency trading algorithms as early as 2018. And you still want to do business with a company that does that? So you take your drawers in to be dry cleaned and they sell your drawers to the highest bidding pervert out there. That's what that's analogous to doing. You're selling the order flow to the high frequency algorithms. It's not, it's already they got an unfair advantage because they can put in 30 million trades in like 60 seconds. But now the only way they can do this is by cheating and them selling you other people's order flows. That is ridiculous. Unbelievable. And they're able to get a, where's the SEC? Where's the CFTC? What's going on? Meanwhile, Robinhood still appears to be having outage issues with the app going down as recently as Monday and again this morning. In response, the company hired former Republican SEC Commissioner Dan Gallagher as its top lawyer. Gallagher has years of experience with federal regulation. How is this? We talked about corruption yesterday on this broadcast. Now we got to deal with it again. How is that even possible? That's messed up. So now you get to go and hire the SEC to protect you from the SEC. Money talks, I guess. Now, Robinhood is empowering a whole new class of investors, and I think it's critical for us to have a voice in Washington to advocate for our customers and fair markets, Gallagher concluded. Enjoy those IPO shares, Dan, after the Citadel-led IPO, of course. This is crazy talk, ladies and gentlemen. People still want to open up an account. You didn't follow the money. You didn't do your due diligence. You're getting free commissions because they're selling the order book to high-frequency traders. No wonder people are complaining and saying they can't they can't make money in that market. I guess not. You're competing directly against, this is really jacked up because you're already competing against the algo monsters when you trade in the markets anyway. That's already a give me. But now they're selling the order flow directly to the high frequency traders so they can take the opposite sides of your trades and move the markets against you. That is a criminal act. That is crazy. Absolutely insane. I cannot believe it. I can't believe it. It is that whack. It is that whack. But hey, we should be used to this by now, right? Here's something else to get used to. Did you realize that as of this morning, Apple's market cap has surpassed the entire Russell 2000? Did you know that? On Monday, in a tweet that went viral, it demonstrated that the market cap of Apple was on the verge of overtaking the entire Russell 2000 index of small cap companies. All right. Well, now it's official. And as of Tuesday, 4.3% jump in Apple stock price, largely on the back of the latest upgrade from Bank of America, which raised its price target to $140 post-split, citing an even greater multiple expansion as the catalyst because there's nothing else really. But when you take a look at Bank of America stock, too bad the same can't be said about them, as we looked at Bank of America stock just the other day. And as you can see, it is still in a bear market. Even after Warren Buffett sunk billions into the bottomless pit that is known as Bank of America. It's still in a bear market. The stock market as a whole is going up while the financial and banking sector is moving in the opposite direction. That should tell you that there's something wrong. And that when the correction comes, it's not just going to be a correction. It's in danger of becoming a trend change from a bull market to a bear market. You cannot have a sustained, healthy bull market without the participation of the financial sector. I'm sorry. You can't have it. It's not going to work. You can try it, but it's not going to work. It's not going to work. You don't believe me? Type in XLF and you will see that the financial ETF is in a bear market. It's in a bear market. No matter how you slice it, no matter what you want to say, no matter how you feel, it's in the bear market. 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 It's not doing anything like it's supposed to be doing. Look at Bank of America. Same thing. Same thing. So you guys can do what you want, but I'm not throwing my money down a bottomless pit. I'm just not going to do it. I'm just not going to do it. I'm not going to do it. Now, you can make an argument and say, well, I think that, the financial sector is going to get its act together and we should see some type of rally toward the end of the year, I think. No, not at all. You left the bull market camp officially on March the 19th. And while the other markets as a whole, the broader market as a whole has recovered, your financial select spider has not. Your XLF has been in a bear market since March, while the NASDAQ is going bananas. But your financial sector is not. It can't even get off the ground. That is a problem that no one really wants to talk about, but it is a problem. And it needs to be reckoned with. What's really going on? How is the banking and finance sector not participating? It doesn't make any sense. Now, if it was just one bank like Bank of America by itself, then you could say, well, it's just Bank of America. But as we have been discussing, it's all of them. They're all bugging. But yet Apple is doing all right, even though they can't make a computer, they're doing all right. Even though they don't know how to make a computer, they're doing all right. Apple used to be synonymous with quality. When you used to hear the word Apple or hear the word Mercedes-Benz, it was synonymous with craftsmanship, superiority. Now they've gotten so big they don't even care anymore. They will sell you $2,000 and $3,000 computers that end up breaking down within 6 months. Really? And then when you try to get it fixed, repaired, replaced, whatever, they say it's your fault. Our computers are perfect. They don't have any problems. Remember how that used to be the biggest selling point? If you're tired of viruses and stuff on your computer, you need to ditch Windows and go to a Mac. Remember that? That was Mac's biggest, strongest selling point, was the virus-free computing. It meant something. Apple doesn't mean anything anymore. It's just overhyped and over expensively priced products. You can go and get an Android product for a fraction of the price of an Apple product and get pretty much the same type of craftsmanship. So really what you're paying for is bloated markups, but there's no difference in quality. I can't say that I see a difference in quality. I had to go back to using Windows because my Mac blew up. Brand new machine. And then what do you find? Well, they were having problems back in 2015. Well, they were having problems with the 2016 model, but they fixed it now. Oh, they had problems with every year we hear that. They had problems with the 2014 models. Oh, they had problems with the 2015 models. Oh, they had problems with every year. Every time they come up with a new computer, it's whack. It's garbage. And I wish I would have known that before I paid thousands of dollars for the brand new model that just came out that nobody had yet. That was supposed to be a game changer. Game changer, my behind. The thing is inoperable. I had to go back to Windows. And it's funny, Windows computer is still working, but the Apple, not so. Not so. So yeah, Apple, I see what you're doing, but let's be honest. We know that eventually it's not going to last because unfortunately you can't have a strong bull market without the participation of the financial sector. This is basically 2007 all over again too. Because remember, back then, the issue and the argument was, oh man, the S&P is hitting new highs. Oh my goodness. Oh, even the Russell's participating. Oh my goodness. Oh my goodness. But there was a problem. In 2007 on through August of 2008, the NASDAQ was not participating with the rally. The other indices were moving like gangbusters, hitting new highs every month, while the NASDAQ was sound asleep. And I warned people back then, I said, we have a serious problem. Your NASDAQ is not participating. This rally is not real. It is going to end horrifically. All right? And I'm the first to tell you, I was not aware of reality back then. I was just looking at the markets and looking at the charts and saying this is going to end really bad. And I was right. Now I didn't know anything about the whole mortgage debacle. I didn't get that. I didn't understand that. I knew when they said get out of the market, the gig is up, and so I had to move right. But I didn't understand the ramifications and repercussions that were coming. That's twice that's happened to me now. The first time it happened to me was in the month of September, like the end of August, going into September of 2001. I noticed the market was in the beginning stages of a decline that would last about 18 months to reach its target. I didn't know that within 2 weeks, the market was going to reach that target. I knew nothing about the attacks, but I was right about the direction of the market. Likewise, in 2007, I said something's not right. The NASDAQ is not participating. And that lasted well into 2008. And I was like, I don't understand. I don't get why this is happening. And then when the whole stuff hit the fan, you know what happened. When September hit, that was it. September, October was devastating in 2008, and that's when we found out what was really going on, the real truth behind stuff. And I'm seeing the same pattern emerging now, except for this time, the NASDAQ is the one that's truly outperforming everybody else. And it's the Russell that's saying, I don't believe it. I'm not participating. You guys are hitting new highs, and I'm not. I'm done. I'm done here. And I'm saying it again. This is going to end very badly. Very badly. Very badly. Because the financial sector is not participating. There's something wrong. There is something wrong. Excuse me. Yeah, man. I see in the live chat, Sam. Yeah, man. I physically went into the local Apple facility, and they were so backlogged, man. It was ridiculous. So I just said, forget it. I'm never going to be able to get up in there. So I was like, whatever, man. Let's see. So here's something else we got to talk about. And this is interesting also. And I have a little bit of information to add to this one. Okay. So now we have black owners accusing McDonald's of systemic discrimination in a $1 billion lawsuit. Why have so many of McDonald's black franchisees lost their businesses over the past 4 years? Could it possibly be due to entrenched racism by one of the world's foremost practitioners of corporate activism? That's what a group of plaintiffs are alleging in a lawsuit first reported Wednesday morning by the Wall Street Journal. A group of several dozen black franchisees are suing the world's most recognizable fast food chain, accusing management of deliberately sabotaging the business prospects of black franchisees. In the lawsuit filed Monday night in the U.S. District Court of the Northern District of Illinois, the lawyers detained allegations that McDonald's routinely steered black franchisees to restaurants in undesirable locations, mostly in inner city, minority-dominated neighborhoods. Among other tactics, McDonald's allegedly provided black franchisees with misleading information to push them toward these less desirable areas. McDonald's responded that most purchases of businesses occur between franchisees and that the company makes information available to all franchisees online. The lawsuit is seeking compensatory damages for owners of between $4 million and $5 million per store. The owners involved represent more than 200 McDonald's restaurants around the U.S. That would be a total of about $1 billion at the high end. Due to this implicit policy, black-owned restaurants often carried higher operation costs while bringing in less than average annual sales. Now, between 2011 and 2016, black franchisees say their average annual sales were roughly $2 million, which is $700,000 below the average for all franchisees during that period. Now, the plaintiffs also accused Mickey D's corporate of showering white franchisees with rent assistance and other subsidies, while the needs of black franchisees went largely ignored. In one example, the company refused to pay for an armed security guard and also refused to reduce the rent for a franchisee in a troubled neighborhood in Atlanta. According to the lawsuit, open and covert discrimination caused the number of black franchisees to dwindle to just 186 this year from a high of 377 in 1998. A shift the plaintiffs and their lawyers attributed to racially discriminatory practices. Now, McDonald's intentionally and covertly deprived plaintiffs of the same rights enjoyed by white franchisees, according to the complaint. Now, McDonald's, via its PR team and corporate counsel, repudiated the allegations from the lawsuit and claimed that the total number of owners has fallen amid considerable consolidation over the past several years. As a percentage of the overall population, black franchisees remain largely unchanged. The company added that many of the franchisees who joined the suit successfully operated multiple restaurants, for years. Very interesting. However, McDonald's has repeatedly shown that it cares about social justice and equality. It was one of the first major American corporations to join the advertiser boycott of Facebook. It made a big show last year when it said it would no longer resist the localized push from a $15 minimum wage. Has McDonald's willingness to engage in corporate activism simply opened the door to being targeted by opportunistic lawyers in the hopes of a quick settlement? To be sure, the fast food chain is also enmeshed in a battle with its former CEO, Steve Easterbrook, to try and claw back some of his compensation in the name of decency. We honestly don't understand why the lawsuit seems to be such a priority for Easterbrook's successors, but we imagine the motives there are somewhat less than noble. All right, so here's what I think, in my humble opinion. All right, so just a little background, just a little teeny background. Okay, so as we know, or maybe people don't know, I'll let you know. Back in the mid-90s, if you wanted to become a franchisee of McDonald's, the buy-in was $1 million. Okay, straight up, off the rip, you needed $1 million. All right, that is a high threshold for most people wanting to start a business. You needed $1 million. Okay, period. That was back in the mid-90s. All right, here we are, almost 30 years later. I have no idea what it is. It's probably 2 or 3 million to buy in now. First of all, that's a lot of money to come by. All right. Now you can finance it, but that had a lot of strings attached and was very difficult as well. We know the Small Business Administration has limits on what they would give you. So for the most part, even if the Small Business Administration gave you 200 grand, you still got 700 grand you got to come up with. All right. Whether you take out a second mortgage in your house or whatever, sell all your Beanie Babies and your Garbage Pail Kids cards. I don't know. But it was a lot of money to come by. I didn't know too many people that had money like that. Even the middle class, Black Americans with the good government jobs who are chilling at GS 12, 14, and 16 and 18 levels, making six figures, didn't have 700,000 or $1 million just lying around anywhere. So if you wanted to go in, you would have to form a corporation and pool your money together with other people, go in with someone else. But there were a lot of, sole owners, also franchisees of McDonald's. I remember this one gentleman who had a McDonald's in a very rough neighborhood in a very rough city. And his McDonald's kept getting robbed over and over and over and over again. Now, I don't know if he ended up, selling and getting out. I know when I talked to him, he was seriously thinking about getting out because he kept getting hit up. Now, being that the McDonald's where it was located, it was in the inner city. It was technically in the hood. But if you really think about it, there are other stores in the hood. Number one, they have liquor stores in the hood. They also have 7-Elevens in the hood. And you know what? They get robbed too. But they pretty much are still there. One of the economic indicators that I use besides HAT, which is my Illuminati indicator, I have several. But another one is my McDonald's indicator and my 7-Eleven indicator. Okay. It used to be very reliable, but not anymore. The indicator said that if you ever see a McDonald's going out of business or a 7-Eleven, regardless of location, things were very bad, not just in that local jurisdiction, but with the economy, if the economy as a whole. How many of you can say that you've actually seen a McDonald's or 7-Eleven go out of business? Very few of you. I've seen one 7-Eleven and one McDonald's. That's all I've seen. That's all I can remember ever seeing is one McDonald's and one 7-Eleven. There also used to be an unwritten rule in the street that if you were looking to open up any type of brick and mortar business, you want to go where it's close to a McDonald's. One of the reasons why that was the case is because McDonald's spends a lot of money researching where to put stores. They're not going to put a store somewhere that is not going to produce profit. McDonald's is not a burger company. It's a real estate company that just so happens to sell burgers, a lot of burgers. Excuse me, but it's a real estate company. So as a real estate company, they do a lot of planning and stuff goes into where to place a McDonald's. So you're almost guaranteed success as a brick and mortar business if you are located within walking distance of a McDonald's. Okay. That's still the case to this day. Now, there are a lot of, strip malls and stuff where McDonald's on the same lot. Those stores will do relatively better than a store that doesn't have McDonald's on the parking lot. All right. Even if what you're selling, no one really wants, you will still sell more than someone selling the same thing you're selling just by the fact that you're located in the same parking lot as McDonald's. All right. So walking distance of a McDonald's, you're gonna make money. It's just how you're gonna make money. Everyone goes to McDonald's. Number one restaurant in the world. Everyone goes to McDonald's. Doesn't matter what you think about the quality or the Big Mac or the food in general, at some point, if you're hungry enough and there's no other restaurant in town that can get you something to eat, you're going to go to that McDonald's. Oh, yeah. Chances are you probably can't name anyone that has never been to McDonald's or eaten something from McDonald's. Every human being on the planet basically has eaten something from McDonald's. The reason why you would use McDonald's as a fallback if you ever had to is because, in my humble opinion, they put crack in all their food and it's addictive, even though it's nasty and it'll make you sick. But let's just be honest. You're going to go where you go. So to hear that the black franchisees are saying they've been discriminated against is very interesting. Can we speak honest? Can we keep it real? All right, let me give you a trigger warning. I'm gonna give y'all this is a trigger warning. I'm gonna say some things right now that not only will people not agree with, but they will find very controversial. And I'm just gonna give you a trigger warning right now. What I'm about to say may hurt some people's feelings. All right? It's gonna hurt some feelings. I'm gonna be called some names and a whole bunch of other things. I don't care. Because we talk truth on this channel. We talk money and we talk money. We got to follow the money. You and I both know, all right, that for people of color, especially people from the hood, especially people that are not just from the hood, but people that are from the streets, we know where the money's coming from to open up that franchise. We don't need to be specific. You use your imagination. If you know a dude who still lives in the hood, he has the only Lamborghini parked in front of the parking lot in the hood. You know that he is a street professional. And if he has a McDonald's, it's because he has finally decided either I need to clean my money and go legit and get off these streets, or he's just trying to stay in the streets, but he's opening up businesses so he can wash his money. You gotta have a laundromat in order to clean stuff, right? So it's funny that these black owners, who probably 9 times out of 10 is using money that has been washed multiple times and has an affinity where they are allergic to law enforcement, would be seeking to go to the place that they are allergic to under a lawsuit. That's funny. Can you imagine? Can you imagine John Gotti suing somebody and taking him to court? Can you imagine that? You would think that if you are a man of the streets, you don't want nothing to do with law enforcement or the courthouse, period. You don't want to come within 20 feet, 100 feet, or 20 miles of a police station or a court. So it's funny that these people who have reputations for no snitching and snitches get stitches and all this other stuff, but yeah, you ready to go to court now though. You ready to go to court now though. So I think it's funny that, individuals who go this route, all of a sudden now they want to say racism and they want to sue and go to court. Really? So that's what you're doing now. No one told you to open that store in the location you opened it to. Now, you may have gotten some, let's say, some finessing from corporate. They probably showed you some all really pretty graphs and charts. Probably had you speak to a couple of people that are successful with their McDonald's in questionable areas, and you said, okay, sign me up. You can't blame McDonald's for that. You still got to take responsibility for your own actions. Nobody had a gun to your head and said, sign or I'm blowing your head off. Nope, you get to decide where you want to put your stuff at. You don't have to put it in the hood. You chose to put it in the hood. Why do people put anything in the hood? You want to know why? Because there is a school of thought that says you can squeeze more money out of a poor person than you can a middle class or rich person. if you think about it, and I'm probably gonna mess this quote up, but I'm gonna quote from the prophet George Bailey from the movie It's a Wonderful Life, where he said that it is these same riffraff that you're talking about that do the living and the dying and the working in this town. And is it too much for them to ask for a home where they can lay their head and raise their family? All right. The reason why you put businesses in the hood is because you know you're gonna make a lot of money. If that was not true, there would be no liquor stores on every corner in the hood. There would be no McDonald's, no 7-Elevens, no gas stations within walking distance from a hood if there was no money to be made in that hood. But see, they figured the inner city out. They know that the inner city is plagued with all kinds of problems. We know that there is gambling addictions in the hood, and there's alcoholism in the hood. That's why you see liquor stores on every corner in the hood. People know that these alcoholics and gamblers go hand in hand. So the gambler is going to come in there and say, give me a pack of Marlboro Lights. I'm paying for this 6-pack of beer, and go ahead and get me 3 scratchers. And let me go ahead and get a pick 5, and let me get a Powerball. Yeah, they know that. That's why 7-Eleven sells lottery tickets. They probably make more money off of selling lottery tickets than they do even selling gas or food. Lottery is a big money maker, especially in the inner city. All right, just saying. That's just saying. Yeah, I see in the live chat. I know it's dirty money everywhere. I know all the mattress stores that you see. It's alarm. It's really a laundry, man. I know. We ain't stupid. When you see a particular store, whether it be in a mall, a strip mall, outside, or in a parking lot by itself, and you don't ever see nobody going up in and out of there, you don't really see them moving no product. It's because they're not moving product. So that furniture store that you see that you never see nobody buying furniture, but yet they got people standing around. Well, it's because they're not in the business of moving furniture. They're in the business of moving something else. We not stupid. I just think the lawsuit is funny because you feel that you're going to capitalize off of this incredible so-called wokeness to social justice and activism, and you're going to take advantage of it, and you see this as a quick lick. They're really hoping to settle out of court. That's all it is. They just want to. It's just a quick lick. A lot of them are struggling. Now, it's another fact of life, ladies and gentlemen. People don't want to hear this. Just because you go and you open up a McDonald's, that's not going to guarantee you success. Now, here's the problem. Anyone who has ever done any type of commercial lending, or if they worked in underwriting, they will tell you, they will confirm what I am saying to you. The highest, most riskiest business to get into is the restaurant business. And I think they have something like a 95% failure rate. All right. Restaurant business is hard. It's hard. You need to be Wolfgang Puck or Martha Stewart, or fill in the blank of your favorite television cooking personality. You gotta be nice with the spatula. And that's just to give you a fighting chance. But even still, the uphill battle is hard because there's so many restaurants. Your food has to just be impeccably delicious. And even that is still going to be hard because you have these really big franchise, these food chains like a McDonald's, that are there. And people know that they already know what they're going to get out of McDonald's. They don't know how your food tastes. And for people who may have a little tight budget, they don't want to risk spending that $20 at your establishment and they've never eaten there before. So they're going to go to McDonald's where they know exactly what they're going to get for their money. So you're already hurting on that one. But on the flip side, just because there's a McDonald's there doesn't mean they're going to outdo XYZ Italian restaurant that's right there too. There's a lot of restaurants, but it's such a just gruesome business. If you're not a chef, and I mean a very good chef, you probably want to stay away from the restaurant business. That's probably not the business for you. I'm just being honest. Now, McDonald's, yeah, McDonald's makes money. McDonald's it's a unicorn. It's a rare bird. All right, they're rare. All right. Now, me personally, I prefer Wendy's. I think Wendy's has the best burgers on the planet. But here's the messed up part though. I like McDonald's French fries. Okay, there it is. I admitted it. Okay, I admitted it. Now I'm gonna walk into the building at McDonald's French Fries Anonymous and then introduce myself. Hi, I'm Dex, and I'm a McDonald's French fry aholic. Hi, Dex. Would you like to share today? No, but I will eat a French fry if you have one. All right, so McDonald's French fries. I know they put crack and heroin in them. That's why they're so addictive. And I know they don't melt and they don't decay. But hey, what do you want me to say? Okay. I need deliverance. No, seriously though. But the restaurant business is so competitive and difficult, more than any other industry that I can even think of. Because you have to find a way to differentiate yourself. You need to get like the world's best food critic to come and eat at your restaurant immediately. And you need to milk that for all it's worth. Straight up. All right. I'm just saying. I'm just saying. I don't know. I have seen many a restaurant go out of business. Many a restaurant, even some of the big chains, they go out of business. I'm sorry. It's hard. It's hard. So don't blame McDonald's per se because you're failing. All right. There are other factors that go into it. Just because it's a McDonald's doesn't mean people are going to go in there and eat. Some people hate McDonald's and will never eat at McDonald's unless they absolutely had to, because there's a Wendy's right there. So they're going to go to Wendy's because those burgers, man, hot and greasy. All right. Or maybe they want Chinese, or maybe they want Thai food tonight, or maybe they want Japanese, or maybe they want Chinese, or whatever. There's so many restaurants. All right. And most of them, to be honest with you, they're just average. Most of the restaurants are just average. And the truth be told, some of them are just nasty. All right. Now, I don't know what else to tell these people. They thought that if they went and put $1 million in this McDonald's, that they were going to make that 100 times fold. It's just not how it is. You know, there's a lot of factors, man. Your location, everything. It's just where you are. Now, I will say this though. There is a different characteristics about the McDonald's in the suburbs versus the McDonald's in the hood. When I go to a McDonald's in the suburbs, I go to a McDonald's in the suburbs. But when I go to a McDonald's in the inner city, I'm not just going to a McDonald's, I'm going to a FEMA camp, because there's going to be armed policing on campus, whether it's a private security firm or the local police or off-duty police, whatever. I have seen straight up police locked up, bulletproof vests in a McDonald's. The first time I ever saw that was a inner city McDonald's. That was the first time I ever saw that. And I was shocked when I saw not one but two armed officers in the McDonald's sitting there chilling. They were like leaned up, chilling, talking to the people. And I figured, oh, they just there and they all, you know, they just came in to get a sandwich. They're on the clock. But no, they work there. They were there. And this was outside of a military base. So I wouldn't really call that like hood, because it wasn't. It was right by the military base. So I'm like, what's up with that? But that wasn't the last time I saw it. That was the first time I saw it. The second time I saw it, going to another inner city McDonald's, and yeah, there was armed police on campus with the Glocks ready to get busy if they needed to, and bulletproof vests. So unfortunately, when you have stuff in the inner cities, like you got to put the whole establishment behind plexiglass. A lot of the liquor stores smartened up and they put the whole store behind plexiglass. So when you come in, it's just like an aisle, like this little aisle, like standing room only, and the cashier and all of the product is behind the plexiglass. And a special plexiglass is mad thick plexiglass, and it has this special thing where you put the money in, and then they put your stuff in there, and it's like a revolver thing. It's weird. I had never seen nothing like that before. But I also seen it in inner city banks where they're behind plexiglass. Yeah, ain't nobody just out in the open at no inner city bank. The whole bank is behind plexiglass. It's interesting. Because they're like, we don't trust you. You ain't going to shoot us. But that's not the only problem that is in the inner city. See, the inner city is plagued with a lot of abuses and issues that make it hard for businesses to want to go there. Another issue that they have in the inner city, and no one likes to talk about it, but I'm going to talk about it today. Okay, so when you go to the store in the inner city, don't matter what the store is. Again, you're going to see armed guards on campus. The majority of the store is going to be locked either behind plexiglass or be chained up in the aisle where it is behind some kind of plexiglass unbreakable box that you have to either have someone come with a key and open it and give you the product and march you directly to the counter, or they say, I'll hold it until you're ready to check out, or you have to get the whole box and bring the whole contraption to the thing so they can open it at the register as you're paying for it and scan it. The other problem with any type of store or business in the inner city is not only do you have the over-policing part and the plexiglass, but then you have something else. They say, we don't trust you to even shop in the store. So there's going to be mad security cameras and stuff everywhere, above and beyond any other store. You also may be asked, if you're a female, ma'am, can I take your purse? As soon as you come in the store, they say, can I take your purse? If you got a book bag, let me take your book bag, and I'm going to put it here with the security guy, and I'm going to hand you a ticket, a number, so that when you finish shopping, you come out the store, I'll hand you your purse back or your book bag back. Now, some of you probably listen to me and like, what in the world is he talking about? I'm telling you what it is like shopping in the hood. If it's not behind plexiglass, it's in some kind of protective contraption. They say, let me see, hey, leave your purse here while you go shop. You got those issues going on. And then you have another one, man. This one is a little bit, how can I put it, more nefarious. Not only do they watch you from the time your foot hits the pavement before you can come through those doors, they on you, but while you're shopping, they're on you. They also have mystery shoppers on top of all the security. So this person can pretend like they're shopping, but their main job is to watch you to make sure you don't steal whatever's not bolted down. But then they got another little thing they're about to hit you with that you don't even know is there. The worst security is the security that you don't even know is security. And it's not, ladies and gentlemen, something you're not going to hear talked about anywhere else on social media, but you're going to hear the PulseWave report because we talk everything that has to do with money. Are you ready with this? Here it is. You're at the register. You're so excited. You're buying the new whatever, fill in the blank. But it's a high ticket item. It's expensive. But you don't care. You've been working all year, saving up your money for this. This is like a $1,500 purchase. You're ready to do this. You're so happy. You pull out your checkbook. You're writing the check. You're already imagining in your mind when you bring this new TV into the house or whatever the item is. You fantasize about all the good times you're gonna have with this, man. It's gonna be so lit. You'll be able to see the game a little bit better. It's a bigger screen if it's a TV. You know what? It could be a PlayStation. It could be an Xbox. Whatever the big ticket item is. Fill in the block. Fill in the blank. You do it. All right. So here's what happens when you get to the register. You're excited. They ring it up. You whip out that checkbook. You got your driver's license with you. Bam, you're filling out that check. You're so happy. Your hands are even trembling a little bit because you're so excited. You can't believe that this moment has come. They take it. They run your check thing through the little check thing, and all of a sudden, an alarm goes off like it's a fire drill. What in the world is happening? And they say, hold on for a second. They pick up a phone, call, push a button. Someone's talking to them on the other end. And then they hang up the phone and say, I'm sorry, but you're not allowed to write a check here. What do you mean? I've never bounced a check in my life. I have, what are you talking about? Well, yeah, we can't accept it because you met your limit for the day. Met my purchasing limit for the day. What are you talking about? What purchasing limit? You're not a bank. I don't have no purchasing limit. What are you talking about? You're not my bank. You're a store. But give me my TV. They're saying no. According to this quote unquote electronic system that we use, you've already written like $300 worth of stuff and checks. Did you shop somewhere else today? Yeah, I did actually. I'm not done shopping today. Well, technically you are. We can't accept any more checks from you because you met your limit for the day. That's right. You could have $1 million in the bank, but they have a check system in the hood that will limit the amount of money that you can spend of your own money if you're writing a check. Bet you didn't know about that. Yeah, that's some ill stuff, isn't it? So there are all types of issues and problems when you are in the hood and you're shopping in the hood. That's why a lot of people that live in the hood don't shop in the hood. They'll drive out to the suburbs to do their shopping. And I can't blame them. I can't blame them. Not to mention, a lot of the stores in the inner city too have no return policy. You cannot take something back and get your money back. They'll say, we'll give you store credit, but we can't give you your money back. That's our rule, whether there's a sign posted up or not. Burlington Coat Factory. So, yeah, think about that. So these individuals who decided to go into the the McDonald's business, obviously didn't think this through very well, because the hood is mirrored with all types of issues and problems that make doing business in the inner city extremely risky, and it's also frustrating for those that live there. Because what you're saying is you're penalizing the people that live there, saying, because you live here in the hood, we don't trust you. Doesn't matter that you just graduated with a master's degree and you're about to start working in your field of expertise. Doesn't matter. Doesn't matter. If your address is thus and so, you better believe you're going to be treated differently. Yep. Now, just to give you a little bit more of a taste here, I also had received information that I really wasn't able to test that much myself. So this is hearsay, but this is what I heard, what I was told by some pretty reliable resources, is that not only is the issue limited to the inner city, but I was told under no uncertain terms that your address pretty much will dictate just about every aspect of your financial life. Case in point, I was told that automatically anyone who lives in New York City, this was back in the day, automatically was given a credit score. You had a credit if you lived in New York City. Off the bat, didn't matter what your nationality was. I was also informed that there's always been widespread racism within the 3 credit bureaus. That if you were quote unquote white and lived in a certain middle class neighborhood or whatever, you would be given a higher credit rating than a person who lived in the hood. Even if the person that lived in the hood paid their bills on time, never been late, they're going to get a lower FICO score than a white person living in the suburbs. All right. Now, I'm just saying. Now, a criminal told me about the thing with the New York City driver's license. If you got a New York City driver's license, as far as in the credit game, you're ahead of everybody else. You good to go. Criminal told me that one, so I'm gonna believe the criminal, the career criminal. I'm gonna believe the career criminal on that one. As far as the credit and the white person goes, I'm gonna believe the white person who told me that because I actually seen it throughout their life over the past like 30 years, and they've proven it. All right, they started getting credit cards when they were in high school, so I'm gonna believe that person. I'm gonna believe them. I believe by what I see, even though I couldn't test it myself. I believe it because I see the I see it happening. So I don't believe that the black owners are lying. I believe there is a little bit of truth to what they are saying, but at the end of the day, it still falls back in their lap because you still signed on the dotted line and you agreed to the location. That's all I'm saying. That's all I'm saying. So I believe there's a little bit of truth on both sides, only because I have that familiarity with what happens from a business standpoint in the hood. It's different. It's different. And it has to be because you're taking a greater risk. You have a higher risk of robbery in a poorer neighborhood than you do in a more well-to-do, affluent neighborhood. Those places get robbed too, but not as often as some establishment in the inner city because people like to go with the low-hanging fruit. All right, so it's just, I think it's just a sign of the times. It's a sign of the times. Social justice is here and it's not going anywhere anytime soon because it is a lot of people, it's feeding a lot of people right now. A lot of people are getting paid off of this social justice thing. And yeah, I think it's been taken to a terrible extent, but what can you do? What can you say? You know? I'm just saying. I'm just saying. I think that we've taken things a little bit too far in this country. But since we're on the whole social justice thing, how many of you are familiar with this piece? California to set up task force to examine slavery reparations. You heard it. The California Assembly will vote before Monday on a state Senate bill that creates a task force to look at the question of slavery reparations. The measure passed by the state Senate in a bipartisan vote. The key word is bipartisan vote. That means both the Republicans and the Democrats agree on this. Like I told you, there's no such thing as Democrat and Republican. They are on the same team, just wearing different colored jerseys during practice scrimmage. That's it. Now, the racial left is getting ready for a Biden presidency and a Democratic Party takeover of the U.S. House and Senate by laying the groundwork for their agenda at the state level. Slavery reparations will be close to the top of the radicals' wish list if Biden wins. If they get their wish, everybody and their mother is going to be claiming that they have African ancestry. I can just see it right now. The grand dragon of the Ku Klux Klan saying, "Hey, my grandpappy was black. I deserve some of them reparations, especially if it's millions of dollars per person of color. Hey, I am black too." You'll have, skinheads and all type of. You'll have the Nazis come out. You'll have all these people come out talking about, "I'm black. My grandpappy was black. Yeah, I'm black too." But you still have on that clan sheet. Yeah, I know, but I need some of that money. I ain't pass up on that money. I'm black. Everybody and their mama gonna be black. The most lily whitest of the lily whitest will be black that day. I guarantee you, if that passes, everybody's gonna be black. My grandpappy on my grandpappy's uncle's mother's best friend's side was black, so I'm black. Give me my money. It's ridiculous. But let's be clear. Chattel slavery, both in California and across the nation, birthed a legacy of racial harm and inequity that continues to impact the conditions of Black life in California, said Democratic Senator Holly Mitchell of Los Angeles. She cited the disproportionate homelessness, unemployment, involvement in the criminal justice system, lower academic performance, and higher health risks during the coronavirus pandemic. Now, this is a surprise because California was a free state when it entered the Union in 1850 as a result of the Compromise of 1850. But now we're told there was chattel slavery in California. Well, sort of. Although California before the Civil War was officially a free state, Mitchell listed legal and judicial steps state officials took at the time to support slavery in southern states while repressing blacks. But what about the fact that white people alive today had nothing to do with slavery? Well, Senator Stephen Branford, a Democrat from Gardena who supported the bill, said he only wished it was more than a study. He noted that Friday marked the 57th anniversary of the March on Washington by the assassinated Reverend Dr. Martin Luther King Jr., who was assassinated by his own government just for being black. Well, not just for being black, but being a black man with a mouth. I have a dream speech. So if the 40 acres and a mule that was promised to free slaves were delivered to the descendants of those slaves today, we would all be billionaires, Bradford said. I fear far too many people will say, well, I didn't own slaves. That was so long ago. Well, you inherited wealth. You can inherit the debt that you owe to African Americans. You don't want to go down that slippery slope. You don't want to go down that slippery slope. No, you do not want to go down that slope because now you're saying that great grandchildren can be responsible for the debts of the great grandmother and father. You don't want to go there. Please tell me you're not trying to go there. Because black people, you don't escape either. Because then that means other blacks can sue other blacks saying your great grandpappy is the one that sold my great grandpappy to the English. Therefore, you owe me reparations. No. All right. Is that what we're going? That's what y'all want to do? Please don't play that game. You don't want to do that. You don't want to do that. You don't want to do that. It's dangerous. It's very dangerous because you'll catch that quick lick from the white settlers that brought you over here, but it doesn't stop there because if we're going to say you have to get reparations from everyone who is responsible for the chattel slavery, then you got to now sue. You got to sue the Spanish. You got to sue the English. You got to sue the French. You got to sue the Dutch. You got to sue the Arabs. That means every Arab country is guilty. Everybody's guilty. Matter of fact, you got to go harder than that. You got to say, matter of fact, anybody who was a Muslim worldwide is guilty because your ancestors who were Muslim are the ones that organized the entire slave trade anyway. So now everybody owes everybody money. Do you really want to draw things out to their logical conclusion? Because that's where it goes. That's where it goes. That means any and everybody who took part in chattel slavery has to pay reparations. So black people who owned other black people now must pay reparations. Because yes, black people had slaves too. Yep. And you got to break off. Unfortunately, see, it doesn't stop there. You're going to have to now cut a check to China as well, because there were also Chinese immigrants who were also slaves in the United States. And not to mention the Native Americans that were already here, the indigenous people that were already here. And some of them have Latino descent as well as Asian descent. So now you cutting checks all over the world. Do y'all really want to go? Is that really where we're going? Huh? Because now no one's going to end up with any money. Because everybody's ancestors who did anything, boom, here it is. Well, According to the research here, Mr. Biden, your grandpappy owned my grandpappy, so I need you personally to cut me a check. It could get quite nasty. Do you really want to go there? You don't want to go there because then now you got to cut a check to Japan because you did intern Japanese American citizens during the war. Let's not forget that. You put them in internment camps. And some of them to this day still ain't recovered from the bombs of Hiroshima and Nagasaki. So do you want to go there too? Where's it going to end when we start talking about reparations? You got to be real careful when you start talking about reparations. Really? Because now anybody that had anything to do with the oppression or, horrific conditions that so-called indigenous and otherwise black people in the United States, you're never going to stop. Because then you have to now the states that practice Jim Crow laws, which is pretty much everybody, is going to have to pay reparations too for all of the deprivation that the Negroes faced in those states. Because don't forget, Jim Crow was mad. They did you mad dirty under that Jim Crow. So that means everyone who was financially impacted, because don't forget, black people couldn't own land, you couldn't start business, you couldn't do Nathan under those Jim Crow laws. So now you got Jim Crow states having to pay out reparations too, because that is what it is. All right, if you're going to do it, you got to do it all way. You can't half do it. You can't half do it. Right? So Joe Biden's running mate also is going to have to pay reparations because her peoples also not just had slaves, but they had mad plantations. So now she's going to have to come out of her pocket with some reparations too. Is that where we're going? Is that really where we're going? You don't want to go there. You don't want to go there. You don't want to go there. Trust me, you don't want to go there. Because a whole bunch of research and investigations will have to take place, and that will take decades because you have to find out whose generational line did what. And where does it end? Well, your granddaddy was Genghis Khan, and he killed about 40 million people. So I'm going to need you to come out of your pockets to pay reparations to the 40 million people's ancestry that he affected. Well, can't stop there. Can't stop there. Nope. Anyone who was Adolf Hitler's descendants have to start cutting checks to every Jewish person on the planet for what he did. Oh, and it doesn't stop there. IBM and every American company, including Ford Motor, they have to cut checks of reparations to Jewish people too, because they helped fund Hitler and help him rise to power. So now the United States have to come in and pay all the Jews all over the world because they helped Hitler. All right, they provided ammunitions and all types of things to Hitler. Matter of fact, don't forget, in Time magazine, he was Man of the Year. Let's not forget that. Let's not forget that. So where's this end? It doesn't. We will be doing this forever. Because when you look at the history, everybody did something to somebody. Where does it stop? Well, Herod did kill all of those firstborn babies because he was afraid that there'll be another king to supplant him. So anyone who is King Herod descent needs to cut checks for reparations for all the Jewish babies that you murdered. You know what I'm saying? You can't do one without the other because then that's hypocrisy. So when you open these doors, you need to go all the way in. You don't get to pick and choose because then that's hypocrisy. Do you want to be guilty of hypocrisy? Because that's what you're claiming with these reparations. You're saying that the United States is guilty of hypocrisy, right? And so they need to pay reparations. Okay, fine. Go ahead and let them pay you reparations, but then it's not going to stop there either because now your ancestors did something. And we need to talk about your ancestry, what they did to people too. A lot of people can draw their lines to a lot of scary places. You may even be surprised. Some of the black people that are saying, I need reparations, some of your ancestors did some dirt. So you're going to take the check from the government, but then you're going to give it right back to the people that your ancestors hurt. See where this goes? This is foolish. It's foolish. Where's the money coming from? It is going to be a circular thing because you give me money, then I have to give it to this person. That person owes, you got to give it. It's never going to stop. It's ridiculous. It's ridiculous. And in that case, the U.S. owes reparations to Iraq, Afghanistan, Beirut, Lebanon. They owe reparations to Iran. They owe reparations to China. They owe reparations to Nicaragua and Honduras. We got to pay reparations to Panama. We got to pay reparations to, let's see, where else? Argentina, Venezuela, all the OPEC nations that you bombed into oblivion. This is, you don't want to go there, people. Stop. Stop it. Stop it. Oh, and you black leaders, you don't get to walk away either. You also owe reparations because some of you turned agent of the state, agent of the Fed, and you're responsible for a lot of the black leadership getting assassinated over the years, going back to the civil rights movement. So you owe reparations to their family. All right? Do we really want to go there? And you owe reparations too for letting your districts fall into disrepair. Every black senator, every black mayor and governor who is allowing your jurisdiction to be ramshackled through all these riots and looting while you do nothing, you owe reparations to every person that lost their business and for every person that lost their lives. You need to pay their families. So let's talk about something more recent than slavery. All right? Slavery, none of us were alive for slavery. None of us. We weren't there. We weren't there. But we're here now. All of those black-owned businesses that the Black Lives Matter and Antifa revelers are destroying, they need to pay reparations immediately to everyone whose businesses was destroyed. Point blank. Every person you've killed, you owe that person and their families reparations today. People have died today because of all the rioting and looting. People have died today. People have lost their livelihoods today. So let's go there. If you really want to go there, let's go there. This is something that's happening now. You're alive today. You rioters and looters under the sound of my voice, you're alive today. You need to pay reparations for the lives that you have now destroyed. Since we really want to go there. Yeah. And now the government has to pay even more money because of all the 50+ million people that are unemployed as a result of the lockdowns, the unnecessary, ridiculous, retarded lockdowns. So now the government has to pay every person reparations who lost their work, who are now permanently unemployed because their companies have imploded and gone away. This does not end well, ladies and gentlemen, any way you slice it. The economy is in trouble. It's in a lot of trouble. It was in trouble before the lockdowns. Now it's been pushed over the edge. This is not going to end well. I just want to let y'all know that it's not going to end well. All right? It's not going to end well. Already you have a shoot on sight going on in Chicago, where Chicago gangs formed a pact to execute cops who draw weapons on suspects, says the FBI. Everything is out of control. And this is not going to end well. It's not going to end well for you. And then while we're doing all of this and talking about reparations, we're propping up all these zombie companies with helicopter money. And you think that's going to end well? No. No, it's not. It's not. It's no coincidence that the moment the Fed started to unwind its balance sheet in the 2018 markets, they went berserk. When the Fed shrank its assets by just around 6% between early 2018 and February 2019, the market plummeted by twice that amount. Why? Because the Fed is backstopping everything. As far as I'm concerned, inaction makes the government implicit in the riots and the looting. And when the markets finally do implode, it's because the Fed pulled the rug. Right now, the Fed is propping the market up. Right now, the Fed has its trading terminal on and running 24/7, propping up these markets, buying all these stocks and buying all the bonds, propping up the market. And then once everything falls, what are you going to blame it on then? COVID? Is that what you're going to do? I'm just saying. Is that what this is? Huh? It doesn't work, ladies and gentlemen. No matter how you put it, it doesn't work. It's not going to work. There's a cost for everything. Nothing is free. Everything costs something. Even when people give away things for free, it's not free because it costs the person giving it away. It costs them something. There is a cost associated with everything. If you take a look at the recent data published by the Yardeni Research Company, the Bank for International Settlements, the Institute of International Finance, and the Federal Reserve Bank of St. Louis, economic data database offers an insight into the true extent of central banking practices before and during the COVID-19 pandemic. And there's a wide range of implications. A wide range. Make no mistake, they are planning for the moment that they pull the plug. But it's not going to be for the reasons you think. That's why if you haven't already, you need to go and check out my documentary, There Is No Collapse, so you can understand what I'm saying. Because it may appear that I'm contradicting myself, but I'm not. Trust me. You need to check out the documentary. They're letting this thing balloon up so big so that when they pop it, everything implodes and you have no choice but to go running to the government to save you. All right? And they're going to present to you a boogeyman at that point. There's always a boogeyman or someone to blame. There's always a scapegoat. Blame the Russians, blame the Chinese, blame the Iranians, blame the Martians, blame the leopards, blame the kitty cats, blame the puppies. They're going to blame something. They might even blame you. Open your eyes and ears, people. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And don't forget our webinar on Friday. And Lord willing, I may do a little something today. I got to work out some technical issues, though, first. Hopefully you got something out of today's webinar, our talk, our live chat. I have so much more that I wanted to talk to you about, but I just ran out of time. I often run out of time because there's so much to talk about. So much to talk about. And you can only have but so many hours in a day. So we'll have to take this up tomorrow. We'll go part 2 tomorrow. But there are other things we need to discuss. All right, so I'll see everybody in the trading room, and everyone else I'll see this evening for the end of the day report. Peace.